So it helps us, number one, to determine whether we are in trend or range. And this just shows you more charts that if we're trading the 1-2 band the upside, we're in uptrend, 1-2 band the downside, we're in a downtrend. When I go back to live charts, I'll show you something that's in a really nice uptrend right now. These are more charts showing you where the range trading zone would be, which is between the 1-2 bands, where the downtrend would be, where the uptrend would be. So how can we actually use the Bollinger Bands to trade? Well, the Bollinger Bands can help us pick tops or bottoms. So let's get back to our live chart. Before I show you how to pick tops and bottoms, I'm going to show you that uptrend in a second. And it's going to be, you're going to see in dollar CAD, you're going to see it in dollar Swiss. But I'm just going to show you a chart of dollar CAD. So this shows you that when a currency pair in its very strong uptrend, that it will remain pretty comfortably within the 1-2 band. So I would not be, even though, like, for example, the dollar CAD is selling off a bit today, I wouldn't be picking a top in the dollar CAD until we close below the first standard deviation Bollinger Band. So that kind of answers the question of how do we pick a top or bottom? Well, we pick a top or bottom by waiting. We wait for the currency pair to close below the first standard deviation Bollinger Band. So in this case here, what I want to call your attention to is, let's move from right to left. Here we're in a little bit of a downtrend in dollar CAD. So in this case, you would remain short, look for losses, wait for the currency pair to close above the first standard deviation Bollinger Band, targeting the Bollinger Band on the other side. And so once again, just to kind of hone the point in a little closer, what I want to say is that if we're in the 1-2 band in a downtrend and we close above the first standard deviation Bollinger Band, that's when you would go long, targeting the Bollinger Band on the other side. So once again, dollar CAD is not turned according to our Bollinger Band tactic. Here you can see it goes into the uptrend, closes below it, takes some time, spikes back up into the Bollinger Band, but eventually it touches the Bollinger Band on the other side. And we kind of see the seesaw price action here. If we're in a larger this is in a more consolidative mode because the Bollinger Band is kind of tight. That's how you can range trade the pair. But if we're in a broader trend and we turn, once again, it still touches the Bollinger Band on the other side. In this case, you would see the pair in uptrend. It closes below the first standard deviation Bollinger Band and then targets the Bollinger Band on the other side. This one, we move into downtrend. We close above the first standard deviation Bollinger Band, targeting the Bollinger Band on the other side, and then it does it again and again. Something that's happening right now that I would want to call your attention to is the Aussie dollar. You actually also see this in the Kiwi dollar. And what you see right now is that, oops, sorry, my screen just flashed. Let me move my chart over a little so you can see a little bit more price action. And I'll just refresh my screen just in case for some of you that's not calling up. So right now you're seeing that the Aussie dollar on Sunday morning or Sunday basically gapped upwards, moved above the first standard deviation Bollinger Band. So it tells us that it's turning. This candle obviously has not closed yet, but if it closes like this, it tells us the Aussie dollar is turning, and then perhaps we can get a stronger rally to touch the Bollinger Band on the other side, or at least to get close to it. Because you can see in this downtrend here, there were some little perks upwards, which didn't quite get there, but they were at least 100 pip move upwards. So that's something that we could expect, that if we do close above the first standard deviation Bollinger Band, that we could get to parity before we turn lower again. Sometimes we get a really nice turn like this move over here or this move down here, but sometimes we get these little smaller ones. So how do you set the stop loss when it's out of the first standard deviation Bollinger Band? Very good question. The best stop loss is a swing low, swing high. So in this case over here, if that is too far away, which sometimes it will be, like in this left-hand side of the chart, the stop loss is too far away, then I would say somewhere back into the Bollinger Band in the middle area would be sufficient. So once again, it would have to close because we got, Aussie dollar fading a bit, so it's not clear whether it's going to close here or not. And you see a very similar situation in the Kiwi dollar. Kiwi dollar, just give me 1 second while my chart loads. Also turning, but we got a little doji happening. You know, overnight it looks much better than it is looking right now because it was, you know, at one point at the top of that candle. But right now it's fading. Now, on a shorter term basis, there's actually another way to pick tops and bottoms that I actually like to use quite a bit. And it uses 15-minute charts for those of you that like shorter term trading. And it still leverages on the Bollinger Bands. And it's something I like to call the extreme fade. So let's move over to 15-minute charts, and I'll show you how this would work. Okay, so because we're in 15-minute charts, we use slightly more significant Bollinger Bands because the shorter term you go, the less significant the deviations are. So on the daily and weekly charts, we use the 20-period 2 standard deviation Bollinger Band and the 20-period 1 standard deviation Bollinger Band. So on the 15-minute charts, what we use is we use the 20-period 2 standard deviation and the 20-period 3 standard deviation. So if you could bear with me 1 second, I am going to change this to the 3rd standard deviation Bollinger Band. And what we're going to add on here is another technical indicator, which is the ADX, which measures the strength of trend. Make it a little darker. And then I'm going to add just a little horizontal line in here, just for reference purposes. Okay, so right now, it's a very similar concept as what we had been looking at a minute ago, but it uses slightly expanded Bollinger Band. So, what we're looking for is we're looking for a very extreme move before we pick a top or bottom. So in this case here, we're looking for the currency pair to rally close at or above the 3rd standard deviation Bollinger Band. But we don't just take the trade just because it does that. What we do is we wait, and we wait for the currency pair to close fast below the 2nd standard deviation Bollinger Band. At that point, we'll check the ADX, and we only take the trade if ADX is confirming our trade.